Okay, where are mortgage rates headed? Will mortgage rates drop in 2026? Everybody is talking about mortgage rates. Everybody wants to know what's going on with mortgage rates. We just had the Fed announce a Fed funds rate cut of 25 basis points in September 2025. Following that, mortgage rates went up, so people don't know what to make of it. I'm getting calls. I'm getting questions. I'm going to talk to you in this video about where mortgage rates are headed, give you some historical context. I'm going to share with you this chart. When I pulled this up to make this video, I didn't even believe it myself for where the future of mortgage rates is headed. So stay tuned. I promise you, this isn't me just getting you to stay for the video. This is truly information that I am surprised about. So I'm going to share it. You tell me your thoughts. Tell me if you think some of these projections for the future of mortgage rates are on, they're off, you agree, you disagree, whatever the case. Thanks for joining. I'm Matt, the mortgage guy. I make mortgage and real estate videos to help you, whether you're a consumer, a real estate agent, a fellow loan originator, decipher what's going on in this crazy market. So let's jump right into it. First and foremost, with some historical context, maybe, right? Like, rates are historically volatile. And people don't all understand that. Like, mortgage rates change daily. And so the rate that you get quoted one day might be different the next. The rate you're talking about 1 month is certainly going to be different the month after. Mortgage rates are this fluid thing. They've been volatile for a long time. I'll show you a historical chart, like mortgage rates since the 70s. Early 80s, they were up over 18%. And then 2020, 2021, like sub 3%. They fluctuated quite a bit over the years. In the most recent history, right? For most of us that are watching this or involved in real estate or watching the market for one reason or another, we saw those historical low rates in 20 and 21. And then in 2022, we saw this steep uptick, right? That was a pretty wild, like sub 3% all the way to near 7% in 2022. And then, here we sit, we're almost into Q4 of 2025. We're in the low sixes. Still, the day I'm recording this, I think we're at about 6.25 if you look at the 30-year fixed rate average across the board. So what drives mortgage rates? I want to talk to you about this, and I'm not going to get super nerdy. I'm not going to get super technical. I personally don't operate like that. I try to explain things in simple terms because most people, they don't want to be mortgage professionals. They just want to understand a little bit. And so there's a 10-year treasury yield. And people look at that and know that the 30-year fixed rate mortgage kind of follows that 10-year. 10-year currently is at about 4%, 4.07, 4.08, and the 30-year fixed rate is about 2% higher than that, 6.25, right? So maybe it's 2.2% higher than that. When the 10-year goes lower, mortgage rates go lower. When the 10-year goes higher, mortgage rates go higher. So that's an easy way to look at correlation between the 10-year treasury yield and where mortgage rates are at. Another thing that affects mortgage interest rates is inflation expectation. When we have higher inflation, it pushes bond yields and mortgage premiums up. If inflation's coming down, rates follow. Currently, we've had an inflation problem. And you've heard the Fed talk about, like, we need to get inflation under control before we can do anything and push mortgage rates down. That leads us to the Fed. We just had a Fed funds meeting. It confused everybody. The Fed lowered the Fed funds rate. Mortgage rates went up. The Fed doesn't set mortgage rates, right? They set the short-term overnight Fed funds rate, but their actions do influence market interest rates. The rate on your car loan, the rate on the CD at the bank, it affects investor sentiment and in a roundabout way affects mortgage rates, right? And then lastly, what drives mortgage rates, and this one has really been prevalent lately, is economic growth and recession risk. When the economy is weak and there's problems, mortgage rates come down. And that's what happened just recently, September of 2025. There was a jobs report that was way off. The economy showed a lot of signs of weakness. Mortgage rates came down pretty sharp. Let's jump into forecasts and expert predictions. I'm going to show you the chart, I promise. But before I do, Fannie Mae, who I think is an eternal optimist, expects mortgage rates to end 2026 around 6%. For those who've watched recently and they're like, oh, we've gone from 6.5 down to 6%. They just think that things have gone down. Things will continue to go down. And they think that rates will go down to, 5.5 or 5.25. Fannie Mae, who in my opinion is an optimist, is saying 6%, which is not much lower than where we're at now. Forecasts vary. Some are talking about the mid fives, but like most analysts are warning that unless inflation falls faster than expected or the Fed goes on a crazy cutting spree, rates could remain like in the 6% plus all of 2026. And so with that, let me show you this chart. I don't want to be the guy who just waits until the 10-minute mark to show this chart. I've got other stuff to show, but I really want to show this. This thing blows my mind. This is the market consensus forecast, 30-year fixed rate mortgages. And the black that we see here on the left is the historical data, right? And this goes back to October of 23. Rates came down, rates went up, rates went down, rates went up. We are here September of 25, 6.3-ish%. Here is the forecast for the future. Pretty flat, and up. Now, I shouldn't be super surprised, but check this out. Over the next 2 years, 26 and 27, this is like a slow and steady increase up to 7%. I don't know about you, but personally, as someone who works in mortgage and real estate, this is concerning for future home buyers. Future home buyers are stretched. They're having a hard time as it is. You tell them that, mortgage rates are not only not coming down for them in the future to make things more affordable or make a future refinance available, but the rates are going up. That, in my opinion, should be a little bit of a concern. And so, I can go to Fannie Mae's forecast and, Fannie Mae has the end of 2026, Q4 of 26 at 6.1%. It won't give me their chart for whatever reason, but, oh, there we go. See, there's Fannie Mae. We're coming down a little bit, but not a ton. Where's Wells Fargo? This is an older one. They did it back here, I think, but they were like in the mid sixes. I think it's pretty wild to see. So give me your thoughts. Comment down below whether you think this is way off. No, rates are going to continue to come down. They've got to. The Fed's going to cut the Fed funds rate. Inflation's going to be down. The economy's stalling and slowing. There's plenty of factors that I could see the argument for mortgage rates coming down. So we talked a little bit previously about historics. So here it is in the 7% range in the early 70s, got up in the 8s and 9s, and then boom. I think my parents bought a house in like 79. They probably got about 10%. And they bought another one in 81. And if I remember correctly, in 81, they had something like a 12% first and 18% second. I think that was it. And they were super stoked about this 12% first, because check this out. December of 81, like the average was up here in the like October of 81, 18%. Could you imagine paying 18% for a mortgage? That's wild times. And then, it's been a 4-decade cruise, lower, and lower until these glory days, right? 20 and 21, where the money was cheap as ever. So that's some historical data. That's a little bit about what to expect in the future. Personally, if you ask me the different scenarios that can happen, I'll give you kind of a if this, then that, right? And a likely result for 2026 mortgage rates, because they could, in all honesty, move up or down. Right? So the economy kind of settles. We got a soft landing. Inflation cools to this 2% target that the Fed is targeting. We could see a moderate rate decline, end 2026 in the mid 5s. 5.5 to 5.75%. Scenario number 2, we've got inflation that's sticky. It's not coming down, or some sort of geopolitical risk that's causing more volatility. Rates could stay high or go up, right? 6.5, 7%. That's not out of question. Scenario number 3, some sort of economic recession, sharp Fed easing. I even heard I heard this rumor that the Fed, like they did in 20 and 21, could be a buyer of mortgage-backed securities. If they're out there buying these bonds, that puts downward pressure on interest rates a lot. And so we've got economic recession, we've got trouble in the economy, the Fed is cutting, they're buying mortgage bonds, rates could fall sharply. Rates could get down to 5%. Rates could be in the high 4s. I don't know how likely it is, but it's possible. So, multiple different scenarios, who knows, right? Leave your comments down below. Let me know what that means to you, the different scenarios. If they go up, I'm not buying. If they go down, I'm buying. I'm indifferent. I'm just going to go out there and look for deals because I'm an investor. Whatever your, thoughts, I'd love to hear from them. If you think they're going to drop, if you think they're going to go up, run your own analysis. I think that if I was to give any advice, if you're buying your primary home, I think that any sort of market timing is a fool's errand. And I really, really believe that. I talk to people every single day. When you're ready, financially, mentally, in a place where I feel strong about my job, I feel strong about my finances, I've got 10% down, this is a payment that I can afford, I'm comfortable, I don't have any risk of losing my job, you go out and you buy something that reasonably fits in your budget. And you don't think about is it 4% cheaper than it was last year? Is it 2% more expensive? Are rates, the lowest they've been in 8 months? And none of that stuff will matter in 5 years, 10 years, 20 years. And you're buying the primary home to live in it. You're not trying to time the market. Now, if you're an investor, you might have a different strategy, or I might give you different advice. You can go out there and look for markets or look for market conditions that are favorable for an investor. Markets where there's too much supply. Markets where sellers are on the market for 90 plus days, where you can go in there and you can write a disrespectful offer. You can get something for 10 or 15% below list price. That's probably the play. I see too many people that the fear and doubt part of their brain talks them into waiting. And I haven't seen a lot of millionaires made from playing the waiting game. That's just the honest truth. I guess in conclusion, will mortgage rates drop in 2026? Your guess is as good as mine. I think they probably will. I think that some of the cracks in the economy that we saw that caused mortgage rates to come down a little bit in September, namely that jobs report, will continue. I think the economy is not as strong as some of the data shows, even, the data that's not as favorable recently. So I think that the Fed continues to cut the Fed funds rate. I think that the Fed will act in a way that's going to put downward pressure on mortgage interest rates. Will they drop to 5%? I don't think so. Will they drop to 6% or 5.75? I think that's possible. So if I were to be given a range of where rates land in the end of 2026, I'm going to say between 5.75 and 6%. For a lot of people that wanted to be 5%, I'm sorry. For others that think that rates are going to go to 8%, or I saw some wild stuff for the last couple of years. I think you're out of your mind too. Low sixes, high fives. That's my story and I'm sticking to it. Let me know if you agree or disagree. If me or my team can help in any way, I'm more than happy to. Go to greatmortgagebroker.com, fill out the form, go to mtmg.com, interact. We've got chat on there where you can book a call. You can ask questions about different scenarios that you're working on, or if just are FHA loans available at this amount in this market, right? Ask away. I've got team members on there to help out with any of that stuff. So thanks for watching. Hope this helped. Talk to you soon. Bye-bye.